2 months ago, I believed I needed a better strategy. I changed indicators, watched more analysis, marked more levels, and searched for the perfect entry. But none of that fixed my trading. My real problem was simple. I could not follow the same process long enough to know whether it actually worked. So, for the next 60 days, I stopped searching for new strategies. I focused on 5 simple trading habits instead. I didn't suddenly win every trade. I didn't discover a secret indicator, and I definitely didn't eliminate losses. But by the end of those 2 months, my results were finally positive after trading costs. The biggest surprise was that profitability didn't come from making more money on my winning trades. It came from removing the unnecessary losses I had been creating myself. In this video, I'll explain the 5 habits that made the biggest difference. Habit number 4, exposed a mistake I didn't even realize I was making, so make sure you stay for that one. Before we begin, 2 profitable months do not prove that someone has permanently mastered the market. Trading remains risky, and no habit can guarantee future profits. These are simply the habits that helped me trade with more consistency, discipline, and control. Habit number 1. I defined my risk before looking at the reward. Previously, the first question I asked was, how much can I make from this trade? That question immediately pushed my mind toward excitement. I started imagining the profit before I had even calculated the risk. My new habit was to reverse the question. Before every trade, I asked, if this trade fails, exactly how much am I prepared to lose? I decided my maximum risk before entering. I identified the price level that would prove my idea wrong, placed my stop loss there, and adjusted my position size to match my risk limit. If the correct stop required more risk than my plan allowed, I reduced the position size. If the minimum available position was still too risky, I skipped the trade. I also started measuring every result in R. 1 R represented the amount I had planned to risk. A full stop loss was -1 R. A profit twice the size of my risk was +2 R. This changed the way I viewed individual trades. A losing trade was no longer a disaster. It was simply -1 R within a larger series of trades. For example, imagine taking 20 trades with a 45% win rate. You win 9 trades and lose 11. If each winner produces an average of 1.5 R, your winners generate 13.5 R. Your losses cost 11 R. That leaves you with positive expectancy before fees and slippage, even though more than half of your trades lost. This is why win rate alone tells you very little. The goal is not to avoid every loss. The goal is to make every loss small enough that you can survive the sequence and continue executing your edge. Habit number 2. I traded one setup using a written checklist. My charts used to be full of opportunities because I had no clear definition of what an opportunity was. One day I traded a breakout. The next day I traded a reversal. Then I entered because of an indicator, a news headline, or somebody's analysis online. I wasn't executing one strategy. I was reacting to whatever the market showed me. For 60 days, I simplified everything. I focused on one market, one trading session, and one predefined setup. Then I created a short checklist. Is the market in the correct condition for my setup? Has price reached my planned area? Has my exact entry trigger appeared? Do I know where the trade becomes invalid? Is the potential reward reasonable compared with the risk? Is my position size within my risk limit? If any important answer was no, I did not enter. This removed a huge amount of pressure, because the decision was no longer, do I think the market will go up or down? The decision became, does this situation match my plan? That is a much easier question to answer. A checklist will not predict the market. Its purpose is to protect you from inconsistent decisions. When you trade the same setup repeatedly, you also begin collecting useful data. You can compare similar trades, identify recurring mistakes, and eventually determine whether the setup has a genuine edge. But if every trade is based on a different idea, your results cannot teach you much. Habit number 3. I limited the number of trades I could take. This was emotionally difficult because I used to associate more activity with more opportunity. If I lost a trade, I wanted another one to recover the money. If I won, I felt confident and wanted to make even more. Both emotions led to the same behavior, unnecessary trading. So I created a maximum trade limit. Once I reached that limit, I closed the platform. After a full profit target or stop loss, my trading session was over. Most importantly, I learned that 0 trades could still be a successful day. If my setup did not appear, staying out of the market meant I had followed my system perfectly. Research has repeatedly connected excessive trading with weaker net performance. More trades create more opportunities for costs, slippage, overconfidence, and emotional mistakes. The market does not pay you for effort. It pays you only when you take risks under favorable conditions and manage those risks properly. Think of a professional poker player. They do not play every hand simply because they are sitting at the table. They wait for situations in which the probabilities justify the risk. Trading requires the same patience. When I reduced my number of trades, I didn't lose opportunities. I removed low-quality decisions that had been hiding among my legitimate setups. Habit number 4. I journaled my decisions, not just my profit. My old journal contained only basic information: entry price, exit price, and profit or loss. That told me what happened financially, but it didn't explain why it happened. A profitable trade can still be a terrible decision. You can break every rule, get lucky, and make money. A losing trade can also be an excellent decision. You can follow your plan perfectly and still lose, because no setup wins every time. So I changed my journal. For every trade, I recorded the setup I saw, the reason for entry, a screenshot before and after the trade, my planned risk and reward, my emotional state, whether I followed every rule, and the one lesson I could take from the trade. I also gave each trade a process score from 0 to 5. A trade received 5 points if I followed every rule, regardless of whether it won or lost. It received a low score if I entered emotionally, moved my stop, increased my size, or broke the plan. This exposed my biggest hidden mistake. Some of my worst decisions were profitable. Those lucky wins were teaching me that breaking the rules could work. Then I repeated the same behavior with larger risk and eventually gave the money back. Once I started grading the decision instead of celebrating the outcome, I stopped rewarding bad behavior. Your account balance shows the result. Your journal shows the cause. Without understanding the cause, it is extremely difficult to improve consistently. Laugh. Habit number 5. I reviewed my trading every week. Recording trades is useful, but the real value comes from reviewing them. At the end of every week, I asked 5 questions. Which setup produced my best results? Which mistake cost me the most? Did I follow my risk limit? Did I take trades outside my plan? What is the one behavior I should improve next week? Notice that I focused on one improvement at a time. Trying to fix patience, entries, exits, psychology, position sizing, and risk management all at once becomes overwhelming. If overtrading was my biggest problem, that became the focus for the following week. If I was entering too early, I worked only on waiting for confirmation. I also separated my planned trades from my impulsive trades. That comparison was powerful. My planned trades did not need to be perfect. They only needed to perform better than my random decisions after costs. Once the data showed me which behavior was helping and which behavior was hurting, discipline became easier. I was no longer following rules because someone online said they were important. I was following them because my own journal showed me their financial impact. I also stopped changing my strategy after 2 or 3 losses. A small group of trades can be misleading. Instead of reacting to every result, I reviewed a meaningful series of similar trades and changed only one variable when the evidence justified it. That helped me avoid the endless cycle of switching strategies, resetting my progress, and never collecting enough consistent data. Final takeaway. After 60 days, I understood something that completely changed my view of trading. Profitability was not one big breakthrough. It was the combined effect of many small decisions: risking a controlled amount, waiting for one clear setup, saying no to unnecessary trades, recording every decision honestly, and reviewing the process every week. None of these habits are exciting. They will not turn a small account into a fortune overnight. But that is exactly why they are powerful. Most traders are searching for something dramatic, a secret strategy, a perfect indicator, or a trade that changes everything. Consistent trading is usually much less dramatic. It is repeating a sensible process, protecting your capital, and refusing to let one emotional decision destroy weeks of disciplined work. If you want to test these habits, try them for your next 30 trading sessions. Keep your risk small, track every trade, and measure your rule following before you measure your profit. At the end, don't ask only, how much money did I make? Ask, did I become the kind of trader who can repeat a good decision? Because one profitable trade may come from luck, but a repeatable process is what gives you a chance to remain in the game long enough for skill and discipline to matter. If you found this video helpful, subscribe to the channel. And in the comments, tell me which of these 5 habits you need to work on the most. This content is for education only and is not financial advice. Trading, especially with leverage, can result in substantial losses. Never trade with money you cannot afford to lose.